Vida VX2 at an introductory ex-showroom price of 59,500, and Nomura says this is one of the most affordable electric scooters to date, at least for Hero MotoCorp. So there is a new launch which is also boosting sentiment for Hero.
Okay, all right. So more in the EV market coming through as well. Counting down, I think just 10 seconds to go as the day opens out. 25,588 as we kickstart the proceedings. Mid-cap index is very, very quiet. Let's see if it manages to build on some gains. There we go. The bell's gone. So the implied open was spot on because we've started 50 points higher. Nifty closing in on 25,600 now. The leaders this morning would include Hero Moto, the stock that we were just discussing. Infosys is actually holding out pretty well. There's a little bit of banks and IT on top, which is actually good news for the Nifty. So you've got Infosys, TCS up and about. There is ICICI Bank, which is about 0.5% higher. Axis Bank, 0.25% higher for the time being. Infosys is the one that really is standing tall with a gain of 1.5%. State Bank of India, again, 0.25% up. So it's not a big move on banks, but small incremental gains are coming through. Even Wipro is flashing some green. So banks and IT, not too bad. On the downside, IndusInd Bank, 2% lower. Asian Paints, now that CCI has confirmed that it is indeed starting a probe in those antitrust investigations. So that's a 1.5% knock on Asian Paints. Sun Pharma, Nestle, Trent, BEL. These are some of the stocks on the lower side. But yeah, I mean, the Nifty is doing pretty well, still holding on to a gain of 50-odd points. And for now, it's fairly steady with some of the large IT stocks and some of the large bank stocks working for the bulls.
Well, that's right. You know, a few stocks actually that deserve special mention from the broader market. Tata Communications, a standard brokerage report. Well, that one's reacting positively. Big up move is what we're seeing out there. RITES, they won a small order, so that one as well has opened well in the green. The stock of the morning yet again is Gabriel. You know, it's up, I think, another circuit. So effectively, just in a matter of the last 10 sessions, the stock has gone up by more than 60%, you know, even more than that. That's the kind of move we have seen. Remember, they announced that rejig, which is EPS accretive, margin accretive, and also, you know, if you put a number to it, last year they did an EPS of around 15 rupees. They're saying because of this entire, you know, consolidation that they're looking at, the EPS goes up by 7 rupees, which means it goes up by effectively 41%. So that's why the stock is, you know, being bid up. Keystone Realtors, they won a redevelopment project. The street likes that. Quite a large one out there. You know, Baman Rustamji joined us on the show just a couple of sessions ago, and he was sounding very, very confident. And I think in the last 2 sessions, if I got that correct, the stock is up close to around 15%. So big move is what we're seeing. Besides that, Ellenberry listed yesterday with solid gains, 30% up. It's continuing its good form today. Sterlite is one of the top volume gainers on the upside, so that's moved up as well. And Siegel, that's another one that's moved up. So good start, guys. Let's see whether or not we can get past the 25,670-odd mark.
So for Siegel India, there is an order win of 1,199 crore rupees. So that explains the big up move that we're seeing, 4% up, very large volumes to begin trade with. And the other one is Prime Focus. Nimesh was telling us yesterday in D Street Chatter that this company is likely to raise some money via a preferential issue along with Kaya. Prime Focus was active yesterday. It's gained, I think from Monday, Tuesday, Wednesday, every day it's been gaining close to about 5%. So that is another big mover. RBL Bank, that continues to, gather a lot of buying interest. RBL Bank, I think, has gained now for 4-5 continuous sessions, and the stock rally continues. So RBL Bank, another 2% higher on that. And then you've got strength in some more names. So a Kamdhenu pops up on the on the volume charts, 24 lakhs to begin trade with. Inox India is seeing buy-in. Hiranba Industry, Tata Communication, Raymond has gained close to about 20% from the start of this week. On the way down, you've got Global Civil Project, a company that listed yesterday is retreating a tad bit. So you've got cuts on that. And then you've got softness in Dreamfolks, the stock that we were earlier referring to. Hyundai too, numbers were in line, but the stock has corrected close to about 0.5%. In MOIL, a stock that you were referring to, that's gained nearly about 2%. Rahul Arora, Chief Executive Officer at Nirmal Bang Equities, is now with us on this show. Rahul, thank you very much for joining us here in the studio.
Morning. Thank you for having me.
Okay, so how do we, how are you going into the earnings season this time? What should we expect? And is there any mismatch in terms of what you're expecting and what the price or consensus is suggesting, where there could be an opportunity?
So I think it's always good to enter with a little bit of trepidation. And hope for positive surprises rather than going in through an overestimation and then coming out with a disappointment. I think, Rima, Q4 was not as bad. I think if you look at the upgrade to downgrade ratios compared to, say, the last 8-quarter average, Q4 was much better. So I think all things considered, there is not a very big disappointment expected from Q1. The only thing that I think people will be watching for is because so much has happened through Trump's tariffs and geopolitically in Q1 is what the IT companies say about the outlook for the next 12 months. I think people were expecting some of that commentary to come in Q4, but I think we'll have a realistic picture. Obviously, it's almost 12% of the index, so you'll have to wait and see how it goes. But I think by and large, for banks, it should be okay. Consumer will be a bit soft. Reliance should be okay. That's 70%, 75% of the Nifty right there. So I don't think you're going to enter into too many disappointments. Cement should be by and large flattish. Durables and electrical should be flattish. Defense should be about okay. So I think on balance, I don't think we're entering in where we're saying, oh my God, there's going to be some, really negative surprises. But then on a company to company basis, anything can happen. Of course, from where we were a few months back at 22,000 on the Nifty. We have rallied about 20%. So it's not like valuations are cheap right now. It's pretty much priced to perfection. So I think any negative surprises will be met very negatively by the market. I don't think room for substantial re-rating is there. And I still maintain my view that I think this will still be a range bound year, where I think going back to the old highs of 27,000 or taking them out this calendar year might be a bit tough on current evidence.
I was coming to that. You've already answered partially my next question, because I remember, Rahul, our conversation on Editors Roundtable, and you were taking things with a pinch of salt and some healthy, perhaps, cynicism at some level, which is really the point that but the market can surprise you, right, at times. When you have cynicism, when you don't see any fresh positives ahead because earnings are where they are, valuations are where they are, I don't know. I mean, is there something that we're missing? Because in the morning we were discussing this golden cross, right? The technical indicators are saying that things are going higher. You ask most of the techies, are saying the market's charging higher. On fundamentals, we're struggling to find a very solid reason. Your thoughts?
So a sector will emerge. We don't know what it is going into the result season. You know that famous English song that I found love in a hopeless place.
Oh, wow.
You might just find a sector in a hopeless market.
I thought Rahul's telling us more.
No, but I think to your point, Surabhi, I don't see, you've had a situation where, as I was saying about IT, you're not sure. I think if you look at the two-wheeler or the auto sales numbers by and large, I think two-wheelers have performed well. I think premium passenger vehicles are still doing well. Tractors are doing well. Premium two-wheelers are doing well. I think look at Aisha's numbers. Yeah. So I think that's a pocket that you can certainly look at. I think EMS players are still doing well. Of course, there is a bit of a slowdown because you did have intermittent rains in the first quarter in different parts of India. But I think by all prognoses, the rainy season is likely to be good. So if that happens and you have a proxy on rural, then two-wheelers obviously comes in. Then you probably look at consumer staples as well. You look at NBFCs, which are basically, ruling the roost in those kind of places. Credit growth to the agricultural sector might pick up. We just had our deputy head of research in Uttar Pradesh recently. I think the crop has been good. We are expecting a good Kharif output as well. So I think the rural part of the economy is something to watch. I think consumer discretionary is still doing well. I think by all, sort of numbers that I have been looking at, United Spirits look like it's going to have a good couple of years ahead of itself. We recently hosted Puneet Chatwal of Indian Hotels in our conference just about a week back. He's seeing no signs of slowdown. Of course, with what happened with Operation Sindoor and the unfortunate incident with the Air India, there'll be a temporary blip, but I think hospitality is one.
Structurally, it's still,
yeah, I think hospitals is another area. So it's not like it's all gloom and doom. There are still, pockets where earnings growth will be good. Now, you can question valuations in those backdrops, but, a lot of these will have a lot of mid and small cap names, but let's look at something like an SBI. Still coming to you at 1.2, 1.3 times price to book. If it manages to grow at 12-13%, the ROAs are at similar level. The ROEs are at about 1.5 or thereabouts for SBI. So that becomes a no-brainer. So it's not like pockets of value are not there. I think PSU banks, consumer discretionary, and a proxy to rural would be three themes that I watch into when I go into results season.
So when I hear you, I think the sum and substance is stop looking at the Nifty and waiting for the Nifty to make a move, do the dance. Look at stocks, find your stocks and stick with them. And you'll find growth.
That's always been my view. You don't buy the Nifty, you buy stocks, you buy businesses. And, I think just one line, I think even when we talk about stocks, right, we should actually address them as businesses. And I think that's a mindset shift that people have, that you're actually buying into a business. So if you're buying into a good quality business and it has 1 or 2 quarters that are, a bit of a down cycle, so to speak, you stay invested. And one classical example of that is the defense sector. I think they're so well priced to perfection. There could be a couple of quarters where numbers don't live up to expectations, but I think structurally it's a great sector to be invested in.
Okay, interesting. Hi, Rahul. Good to have you. And I'm still thinking about finding love in that. Interesting one.
Friday is still 2 days away. Nigel, wait.
All right. So, Rahul, let's focus on the banking name since we just spoke briefly upon that. And SBI is something that valuation-wise obviously has some support. That stake in NSE as well could be a little bit of a booster shot. And the stake in Yes Bank as well. But those are additional ones. What about going down the rug? If you look at it, these smaller banks, suddenly they've come to the party. IndusInd Bank, there was so much of trouble. You made the biggest money out there if you had the guts. You had RBL Bank. People are doubting the book. Now, Sunny, everyone's talking about that. The book value is 280 rupees. And that stock has moved very swiftly, 160 to 260. IDBI Bank as well, 80 rupee stock has become 105. Would you look down the rug or would you stick to the larger names?
One name that you missed out is Development Credit Bank, which is DCB.
Again, DCB, yes.
Despite the run, it's still not trading at one-time price to book. And I think if you look at the credit and deposit growth, it's likely to be 15-17% for the next 2 years. So I think it's not a bad place to be, Nigel, because I think if you aggregate the large cap private sector banks, all of them, you're probably looking at an NI and profit growth of between 10 to 13% compounded for the next 2 years. And most of these, if you look at, say, ICICI, HDFC, of course, some would be at a discount, but the larger consensus ones are all trading at about 2.5 times price to book. So I think Federal Bank looks like an interesting play. And City Union Bank. I think these are two names that I would certainly look at. Both have ROAs of between 13.5 to 4, ROEs of 13.5 to 14.5%, and ROAs of about 1.5% or thereabouts. I think on both there is a lot of work happening on the digital side. So I think cost to income ratios could be coming down. GNPAs and net NPAs are under control, and I don't think both these banks need capital in the foreseeable future. I think we could extend that into NBFCs. I think if you look at something like a PNB Housing Finance or a Canfin Homes, that also looks interesting. I think, this entire segment, which is either operating on collateral or looking at salaried employees, I think could be standing us in good stead. Again, valuations are not too demanding in that front. And if you want to go a little further, I think although some of these stocks have done well, on corrections, I'd even look at something like an AU Small Finance Bank. So I think Federal, City Union, DCB, PNB Housing Finance and AU from the non-large cap space in the BFSI look interesting. And maybe on corrections, even insurance names like, say, an ICICI Pru Life. And if my call on the market goes wrong and it keeps going up, ICICI Pru Life has a very large ULIP book. That could be an interesting one as well.
Lots and lots of ideas there. Rahul, thanks very much for that. Actually, we have more questions, but maybe another time. But you did mention one space, which is hospitals, which is something where you're seeing interest. And I think that's the next big sort of conversation that we have lined up. Maybe you'd want to listen into this one. Apollo Hospitals obviously in focus after approving that scheme of arrangement that will see it combine its pharma, retail and distribution businesses with the digital initiatives under Apollo Health Tech. That's the name of the new entity that's going to be set up. And of course, that entity will then eventually be listed as well. To talk about this, the whole rationale and the creation of more shareholder value, we have Ms. Sunita Reddy, Managing Director at Apollo Hospitals, joining in. Ms. Reddy, thank you so much for being with us. So this is a big restructuring exercise, ma'am. We want to start by understanding the overall rationale. I think what you've said in the call as well is that it kind of simplifies the structure, makes it cleaner, and maybe also reduces the holding company sort of element that was being attached to the listed Apollo Hospitals. Just tell us what is the valuation you're looking at and the targets that you've ascribed, 25,000 crores in revenue over the next 2 years. How have you arrived at that? What makes you optimistic? Which of the businesses will take you there?
So first, in terms of the valuation, we've always felt that the sum of the parts did not do justice to the digital. The rationale behind doing the whole thing is not just to capture the value of the sum of the parts, but to go beyond and create a very strong retail digital business, which is omni-channel. And with this, with the composite scheme of merger, what we're doing is moving Apollo Healthcare as well as the telehealth business into the new company, as well as amalgamating KeyMed, which is the supply chain. And as we move forward, the front-end pharmacies will also get absorbed into this company. So you will have a very, very strong retail company, which is Indian-owned and Indian-controlled, which is very key. So there's a sum of the parts reason, there's the IOCC reason. The third is really to capture the synergies of the digital business, because currently they have 120 million customers. They are doing about 900,000 transactions a day. They have 40 million downloads. The sheer volume of that business and the potential to create large into the hospital business is huge. And this is the way forward. This is the way that we're thinking about it.
Ma'am, just for clarity so that we understand, the projection that you've shared so far, that by FY27, Apollo Health Tech will have revenues of 25,000 crores. Can you give us a rough tentative breakup so we understand what will the scale and size be of the individual businesses by the time you get to that target?
Yes, so as you look at currently, they're at 16,237 crores. They are growing very fast, around 20% growth. As you look at forward, I think the offline pharmacy growth is around 20%, and the EBITDA generated from that is 1,000 crores in 2027. KeyMed is growing at about 18-19%, and with the introduction of private label, there is a very strong opportunity to also improve the EBITDA margin and the EBITDA coming from that, which will be 700 crores. Digital, we are quite sure that we'll get at least 60 to 100 crores of revenue. So total, the breakup of I've given you the breakup of the EBITDA because in the end, that's what counts. You will get 25,000 as you look at the 17 and the 20% growth coming from the three different, the digital, the offline, as well as KeyMed. So the 20% growth results in 25,000 crores of turnover.
Just one quick word, Ms. Reddy. Congratulations on this big announcement. Yes, guiding for a 7% margin, which effectively means at 25,000 crores, you do 1,750 crores. Almost all brokerages believe that this is too aggressive. You don't think so?
Not at all. Not at all. Because as you can see, I've given you offline. Offline is already generating 7% growth and growing at 20%. KeyMed, we know for sure. We've got experience. We're very sure that those 700 crores will come from there. And the digital, as you can see, is, we've been very conservative about growth, even though we're adding new revenue stream, which is the insurance.
Okay. Ms. Reddy, thank you very much for joining in. This is Ekta. Just wanted a sense in terms of the valuations that you all are now working with when it comes to Newco. In September of 2024, the enterprise value which was subscribed during the Advent deal was around $2.4 billion or $2.7 billion. The street is working with probably a range of around $3 to $3.4 billion now. Is that a fair assumption?
Yes, I think the street is being very conservative because if you look at the potential of this company, it is let me say, very good. And I think that more than anything else, the whole valuation has been done by KPMG and validated by Axis Bank. Relative valuation of AHL to KeyMed is at 2.2 times. With that having been said, the transfer of telehealth business, which gives it another 80 crores of revenue, pure revenue, is an additional benefit. All in all, I think, with the current swap ratio of AHEL shareholders getting 1.95 shares for every one share they hold in the new company is also reflects this valuation.
Okay. For Apollo 24/7, that's still making EBITDA losses. Can you just tell us whether you're on track to achieve a break-even by when in FY26? Is it going to be in the mid of FY26 or by the end of FY26? And your GMV target as well?
Break-even will happen in the fourth quarter. GMV target around 4,000 crores, but really I think, GMV is not important. Here's an omni-channel company delivering and potential to deliver 25,000 crores of revenue. So in terms of an engine for growth of revenue and profitability, I must say that this is very strong. And therefore, there will be no losses.
Okay. How is incremental capex going to be funded in NewCo? Because the reason I ask is that, earlier it was a part of Apollo Hospitals, and hence the cash utilization was across all of the businesses from hospital to digital. Hospital is really your cash cow, but that's now going to be a separate entity. So give us a sense in terms of where exactly are you going to be generating cash? How much is going to go into capex for NewCo?
There's very little going into capex because the way that the pharmacies are set up, it's only 10 lakhs per pharmacy, and the ROC on that is on the whole company is 20%. Having said that, they have 1,931 crores working capital. So, I think, use of working capital for the business is all that is required, since the advent funding of 2,430 crores has enabled the company to be fully funded for growth.
Okay. Apollo Hospitals is now going to hold a 15% stake in NewCo going forward.
Yes.
How did you arrive at that 15% stake?
15 plus 2% coming from another company, so totally 17% stake in the new company. How did we arrive at this? I think we did a fair value discounted cash flow method. In this discounted cash flow method, the Apollo Hospitals will own 42% plus what comes from the 17% that we're currently holding. The 42% plus the 17 equals 59.6%. In this, the 42% will get distributed to all of the shareholders. So that's close to 17,000 crores of revenue being distributed to all of the shareholders. Balance KeyMed holds 25, KeyMed and its shareholders holds 25% stake. Advent will hold 12.1%.
Okay, and any plans on monetizing this stake at all, or would you be a long-term shareholder?
I think, we should see how we take this forward. First is to see that we get the synergies of the company in this stake, and the board, a director seat on the board of AHL will help us make sure that these synergies appear. Going forward, there is an opportunity to monetize. As you know, a company with the size and scale that we have now created will definitely be valued. The value will keep increasing over a period of time. So when required for Apollo Hospitals' growth, especially in the hospital business, there is an opportunity to monetize some of this.
All right, Ms. Reddy, in terms of royalty, the new company will pay some royalty, right? I think it's approximately 10 crores is what you're talking about, but that will gradually increase. Could you tell us, how do you see this increase going about? I mean, what could be the ballpark number?
So 10 crores will be the beginning, and then there's a 5% reset that will happen every year.
5% increase every year, right?
Yeah.
All right. And also, a private label on the digital side, I think it's still very, very small, but you have plans to scale it up. Could you tell us, where is that number headed?
So currently it's 17.6% of the offline. We are moving to making sure that it's 17% of the online as well. And we're also using the KeyMed channel to push the private label. So there is an opportunity to supply the 75,000 pharmacies and the 3,000 hospitals that KeyMed is currently supplying to.
Okay. Just a quick word with regards to the synergy between the two businesses. The reason I ask is, how much are you actually going to benefit from, say, the funneling of patients between the two businesses? And what is the plan in terms of synergies going forward?
So if you look at just one part of it, which is quite huge, the diagnostics, 20% of the customers come from Apollo. They come from Apollo Healthco, which will again become Apollo Technologies. So definitely, we are seeing that happening in the diagnostic business. In the insurance business, there is potential of 80 crores revenue, but beyond the potential, for customers who now see that they can pay for their healthcare needs using the insurance policy offered by 24/7, again, another funnel. The third funnel is that we will together work with corporates, and the retail presence that Polo Healthco has is tremendous, with 40 million downloads. So there is, again, we are working on synergies that will make sure that the conversions that happen with some of the pharmacy consumers, both online and offline, moving into the Polo hospitals.
Okay. So, big restructuring done. I'm just wondering, I mean, in any case, you had gotten funding from PE giants just a couple of years ago, when the Advent deal, etc. From infusing capital perspective, whether it is in listed Apollo hospitals, I mean, or even in the new entity that's being created, is there anything on the horizon? I mean, there's enough cash being generated in the business as well. So just from that perspective, how do the next 2 to 3 years look?
Well, I think that all of our businesses is about being self-sustaining, generating cash for growth. Clearly, I think that given the numbers, if you look at the 25,000 crores that we're projecting, growth of 20% from 16,000 crores currently, the EBITDA that's being generated from the offline business is 1,000 crores. And we're quite sure we have a line of sight of this. KeyMed by itself will generate 700 crores of EBITDA. And we're being very conservative about the digital and saying with profitability, they will generate 50 crores. So 1,750 crores of EBITDA coming from these three lines of business in the digital space. As you know, Apollo Hospitals is already generating 1,200 free cash flow. So there is more than sufficient headroom for growth. I mean, liquidity for growth. Beyond that, I think if you look at the debt levels in both companies, at Apollo Hospitals it's 0.2. Here it is 0.6, with only working capital being used for day-to-day activities.
Sure. All right. Ma'am, we'll leave it on that note. Thank you very much. Offers us a good perspective and clarity on the new structure that has emerged. Good luck with all the plans. Thank you for joining in today.
Thank you.
Thank you. We'll take a break on that note. Coming back on the other side, we'll be in conversation with the management of Aarti Industries to talk about the company's FY26 outlook.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by Century Ply Club Prime, Raho Befikar.
Aim to transcend growth effortlessly. Wonder which market cap to invest in. These funds aim to blend asset classes for growth. Motilal Oswal Large and Mid Cap Fund invests in select large and mid cap stocks with minimum 35% allocation. Motilal Oswal Multi Cap Fund invests in select large, mid and small cap stocks with minimum 25% allocation. Motilal Oswal Flexi Cap Fund invests in select large, mid and small cap stocks without restriction. Think equity, think Motilal Oswal. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ.
Welcome back. Well, the markets are holding on to mild gains, but a lot of stocks actually are doing a thing of their own. So let's talk about the chemical space now. The sector has performed, amid the geopolitical uncertainty. We'll also get a sense about what's the impact on supply chain and how is demand shaping up for the remainder of this fiscal. To help us out with that, we're joined by Suyog Kotecha, the Executive Director and CEO of Aarti Industries. Hi, Suyog. Thanks a lot for joining in. Well, you had a brokerage note that came in earlier this week, and they said, that's MK, they say that the US tariff situation may create new opportunities for a company like yours. Would you agree? If yes, in which sectors are you observing this?
Yeah, I think let's take a step back. I think we're just coming out of unprecedented quarter, and given you started by saying sort of understanding impact on supply chain, I think it's very rare that within a quarter we have seen multiple significant geopolitical events. Starting with U.S. tariff announcements on first week of April, followed by India's counter to terrorist attack in Kashmir, then flare up of Iran-Israel, and then pause, and then renegotiation of US tariffs to the multiple countries in the world. So I think with that kind of movements, supply chain shocks are quite real, right? I think we have seen raw material volatility where, going down by 20%, going up by 15% in same quarter, which is quite unprecedented. Even from a physical supply chain point of view, right? For example, Kandla port, from where we export significant quantity of our products, was shut during the mid part of this quarter, and till date the congestions are quite severe. So a lot of shipments getting delayed, having an impact on freight cost. Even the June Middle East flare-up saw a lot of shipments going from Middle East to India to US getting significantly delayed. So I think all of that, I think the industry, especially the export-oriented sort of companies, continue to manage this volatility. As we look forward, I think many of these aspects are settling down. There is one major event that we are yet to see, which is what you referred to in terms of what happens to US-India trade deal, and in general what US does with sort of reciprocal duties beyond 9th of July. And if that settles in favor of sort of India versus rest of the world, we will definitely see demand pick up. But at this point in time, I think customers are waiting to get full clarity. And sort of, we expect that clarity to emerge in the next couple of weeks time frame.
Yeah.
But today is difficult to make that judgment call.
Yeah. So obviously the freight situation is very, very difficult. But do you think it's creating a bit of an opportunity for some of your products? More tariffs come about from other parts of the globe as well. The tariffs could be relatively higher. Do you see it creating an opportunity in an adverse situation?
In a mid to long term, yes, right. I think in a mid to long term, we had described this in our. There are some chains where we compete head on with China. I think in those chains we saw pickup in demand in US, and as I said, if it gets settled in favor of India versus China, we will definitely see pickup in demand. But at the same time, in near term, we do see this volatility impacting in terms of customer taking decisions, because I think businesses like certain environment, right, to make business calls. And when that certainty is missing, when that clarity is missing, we also do see people holding off from making decisions from a large, year-related volumes or a multi-year contract kind of situations.
Suyog, hi, Rima here. Some of the MNC agrochemical companies are still cautious when we chat with them about calendar year 25, calendar year 26. And considering a big chunk of your revenues coming from this sector, give us an indication. I know you've got an EBITDA guidance of about, I think, 18,000 to 22,000 by FY28. Tie in your, aggression, what you see, versus what we're hearing from your MNC counterparts.
No, so I think even our outlook is quite consistent. I think everyone has been talking about sort of volume-led demand growth, but I don't think any one of us is budgeting for margin increase at this point in time. And that's what we also hear from our agrochemical clients. I think a lot of stories around inventory buildup, and in that context, correction in the overall pipeline is kind of done for most of the value chains. And in that context, we see volume-linked growth coming, but it is coming at a relatively significantly lower margins compared to where it was, let's say, 2-3 years back, given kind of demand-supply imbalances we have globally. And that's the story we continue to hear. That's the story we continue to observe. So we continue to see demand growth, but at a relatively, stressed margins.
I think your FY26 Capex was about 1,000 crore, and the second half of the year will see the staggered commercialization of Zone 4. So which products will be available first? How will the revenue accretion? And I think after that, you're going to be focusing a little bit more on the balance sheet, because a chunk of your Capex would be done by the end of this fiscal year.
Yes, so I think that's right. I think this year we will spend around 1,000 crore of capex, and part of that greenfield site will get commissioned this year. Most of these products will go into agrochemical, pharma, and coating sector. But the real benefit of that site will start coming in sort of subsequent financial year, right? When we commission the full site and we ramp it up also to decent utilization levels. At this point in time, I think during this year, the capacities that we commissioned last year, our expanded ethylation capacity, our expanded nitrotoluene capacity, and our expanded MMA capacity, I think we remain focused on sort of utilizing those capacity to the full extent possible. The new Greenfield Zone 4 will start kicking in towards the end part of this financial year, but the real benefits, we should be able to start seeing it in the next financial year.
Suyog, thank you very much for joining in. Short conversation today, but we'll chat when the numbers are also out. Thank you once again for joining in. Let's talk about M&M. M&M sales numbers beat street expectation in the month of June, and the company continues to see strong demand for the SUV segment. My colleague Mangalam spoke with Nalinkant Golagunta, the CEO of the automotive division, and began by asking him about the models that led to this growth.
Strong performance in June, 18%, like you said. Really, what has given us a lot of impetus over the last few months has been the 4 major launches we did last year. And as you know, we had the 3XO launch on the Thar Rocks, both on the ICE side. And we had 2 very strong EV launches, the 9e and BE6 as well. So that has given us the impetus, that has given us some of the growth coming in as well. But the bedrock of the volumes for us, of course, continues to be our Scorpio platform, our HCV 700 on the Bolero as well. So that continues to be a strong foundation. On top of it, the growth has come from these 4 major models.
So, the first quarter so far, your SUV sales have been 22%. What we want to understand is how sustainable is this? And are you likely to up your guidance of mid to high teens growth in FY26 basis this 22% performance in the first quarter?
Yeah, so we called out mid to high teens, and we stick to that performance outlook at this point in time. We are not upping it. It's very early in the quarter, and very early in the year for us to look at it, but we're confident that we'll be able to do the mid to high teens growth.
All right. And what about the EV numbers? What's the monthly run rate out there? What about the utilization and the capacity that you're operating at? Yeah.
So when we launched, we said that we have operational as about 5,000 capacity per month. As you know, we launched 3 packs, pack 1, pack 2, pack 3. And but right now, what we are retailing out there to customers is only pack 3, the top end variant. And there's been strong demand for that. And we are at about 4,000 production and 4,000 billing and retail at this point in time, and just on that 1 pack. As we go into festive, we'll be launching the other variants as well, pack 1 and pack 2. So as we get ramp up on those, we should be able to see a little bit of a higher volume coming in from there. But what we have operationalized, we're confident we'll be using most of it.
And when you say higher, it would be 5,000 or would it be more than that? Are you increasing your capacity?
No, at this point in time, what we called out is 5,000 as an operational capacity. So that's what we'll be operating on.
And what about the rare earth issue? Because, the industry is facing that. Are you facing that as well? What's the kind of inventory that you're sitting on for the rare earths? And what's your plan after that?
Yeah, so currently we have inventory of all the affected parts. We have done a full analysis on all the affected parts. And as you know, there's end user certification which has to be put in place. So that's something we're working very closely with the suppliers to get it done as well. We're working closely with the government as well as SIAM to get there. But we're also looking at alternate sources. We're looking at alternate designs as well. So overall, currently we have the inventory for the production that we want at this point in time, but we're actively working to de-risk.
How many months are you covered for?
No, it's hard to say at this point in time where we are, because the suppliers are also finding opportunities to find alternate supplies for us. So it's very hard to say, but currently we're well placed.
All right. And inflation. Tata Motors did speak about considering price hikes. What is the kind of inflation that you've faced so far, and will you be considering price hikes too?
Yeah, so price hikes is part of the regular running of the business for us. So we had projected in our own yearly planning what that looked like. And so we continue to see similar benign trends on inflation. So we'll stick to that. Yes, there is a price hike which will come up, but it's not something which is immediate.
What would the quantum of that be?
It'll be what we have done regularly on a quarterly basis. It's hard to say at this point in time because we are still a month or 2 away from that. And we'll have to see what the inflationary trends are. So hard to say at this point.
Right. While SUVs did well, the commercial vehicles were largely flat. And in that, there was specific weakness in the sub 2 tons vehicle. What exactly is driving this? And are you seeing any sort of change, any turning of sentiment there?
Yeah, so sub 2 ton has on the load side, if I may call it, not on the passenger side. On the load side, we have seen weakness, and it's a weakness we have seen over the last few quarters. The hypothesis we have is a lot of the volume is starting to head towards higher tonnage, and so we're seeing some growth coming from there as well. And there's also the unorganized sector, which is underneath that, below that as well. So bit of pressure from both sides to some extent, and but the beneficiary for us obviously is the 2 to 3.5 ton, which is where we have a very strong portfolio. So while the industry has been muted growth, we've actually given consistent growth, and the market share gains that we have shown over the last few quarters and the market share gains we will see in Q1 as well when the final industry data comes in, tells us that we're on track.
That's the one that is driving your CV sales growth itself. For the first quarter, it's up 4%. Here too, your guidance is high single digit for the full year. So on the one hand, where your SUV, you've outpaced your guidance so far in the first quarter, in CVs, you are fairly away from there. Do you still maintain the high single digit growth guidance for CVs?
Yeah, like I said, very early in the year for us to do any changes in numbers at this point in time. We have a festive season coming as well. We are starting to see some momentum in the rural segment on Bolero and other products as well. So we are hoping that that will translate into some growth coming on the CV side as we head into the festive season. So again, very early to say, so we are sticking with our high single digits.
What about three-wheelers? That was a big 37% jump in June. How much of that was led by electric vehicles? Do you have a target contribution coming in? I mean, what's the prognosis here?
Yeah, so I don't have the exact numbers. It's a separate business unit, but overall consistent growth there. But a lot of that was also coming on the passenger segment side within the three-wheeler EV segment. So that's where a lot of the growth was coming from.
Why is there so much volatility in exports? All of 36% growth in the first quarter, but June was just 1%.
Yeah, so it's hard to say. On an export business, it's hard to look at it month on month. We also have major launches coming up. So we have some stocking that we do in certain markets at a certain point in time versus others. So it's better to do it at a quarterly level and probably even at a yearly level. So overall, we're confident with what we have. We just launched the 3XO a couple of quarters ago in South Africa. It won the Car of the Year award in South Africa. We're just about to launch 3XO in Australia this week. So we are very confident with what we have as products, and we look forward to taking our EVs as well globally in the next few years to come as well. So quite gung-ho on that front, but hard to take a trend out of monthly volumes at this point.
So what's the annual target that you have for exports in terms of volumes?
Again, we don't put out numbers on IO at this point in time, but it should be strong double-digit growth.
Strong double-digit growth. And finally, you called out a lot of new launches in the international markets. What's the kind of facelifts and launches that we can expect in the second half of this year for India?
Yeah, we have quite a bit in store. The most important thing is we are putting out an event in August as well, where we'll be talking about our new platform. That will anchor all our new vision SUVs going forward. So we're super excited to share our vision there and hope the customers will respond with the same excitement as they've done over the last 5 years.
Could you give us a peek into what you are going to talk about there?
Well, the teasers give some clues there, so I'll let the guessing game go on, but we'll be talking about platform and a few vehicles which will be anchored on the platform, which will be showcasing there.
Okay, that's the word coming in on M&M. By the way, the market at the index level is absolutely flat, but ITs are rocking today. The Nifty IT index is a gain of 1.5%. And in fact, the top 4 Nifty gainers today are all the IT heavyweights. So Infosys right on top, 2.5% gain. TCS 1.5%, Wipro 1.3%. Tech Mahindra too is moving up with a gain in excess of close to about 1%. Banks are a bit on the back foot, and the top Nifty loser today is IndusInd Bank. That's down more than 3%. Goldman Sachs today has downgraded IndusInd Bank to a sell, and they've put a target price at 722, so much lower than the current market price of 850. Mitesh is now with us for a few calls, 10 a.m. calls. Mitesh?
So, good morning. I think, you were rightly pointing out IT as the space to watch out for. In fact, a lot of IT names have given breakouts in the hourly to hourly chart. So, I have a buy on Infosys with a stop below 1620 for a target of around 1685 to begin with. Maybe then we'll look at high levels. and a sell on ABB, which is turning slightly negative. So keep a stop of about 59.80 here for targets of 57.50.
Okay. The stock to watch just moments from now will be HDB Financial Services as it makes its debut on Dalal Street. The issue price was 740, but it's seen very strong subscription. It was a large issue of 12,500 crore rupees, and it saw a subscription of 16.7, and it's open with again a 12-13% higher, now 835 rupees on HDB Financial Services. Valuations for it are cheaper than some of its peers, like a Bajaj Finance, for instance. So it's a good debut for HDB Financial Services, 13% up on that. The bell has gone now at, okay, 5 seconds to go for HDB Financial Services. Mitesh, what about some of these private sector banks? They've had a good run, but they've retraced a bit now. You've got even a Bajaj Finance. Some of these financial names are under pressure. Okay, that's the debut of HDB Financial Services. It's open with a gain of close to about 13 times. The valuations, as I said, were seen cheaper than some of the Bajaj Finances of the world. I think analysts had pointed it at close to about 2 to 3 times. So lower than a Bajaj Finance, which trades at say 4.5 to 5 times. So it's a good debut on day one. 740 was the issue price. The stock is open at close to about 840 crore. 840 rupees. We'll get into a break on that note. On the other side, Manisha Gupta will come back and chat about commodities. Stay tuned.
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो और फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना, ये सब एक ही नाम की बात कर रहे हैं और वो नाम है PNB। आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए PNB लेकर आया है MSME लोन स्कीम्स, जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है PNB, वो भी बिना किसी झंझट। झट से PNB का भरोसा, अब हर व्यापार होगा बड़ा।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
लाइफ की भागदौड़ में शादी का प्लान रुक सा गया है? VIPshadi.com पे आइए, इनके टॉप रेटेड एडवाइजर्स लाते हैं दुनिया भर से बेस्ट मैचेस। रजिस्टर नाउ।
वेलकम दादा।
वाह,
अरे भाई ब्रेकफास्ट मिलेगा?
हाँ जी।
हीटर?
हाँ जी।
तो अब क्या सूरज लाओगे?
हाँ जी।
जहां सूरज वहां रोशनी और जहां विक्रम सोलर वहां खुशियों वाली सनशाइन।
Welcome back. Let's now turn our attention to the commodity markets. Manisha Gupta, as always, is joining in. Manisha, morning. What are you looking at?
Well, thank you for that. I'm looking at soft commodities right now because these are the ones which have seen big losses when you look at the first half of this year until now. Well, on my radar is sugar because we've seen sugar prices decline quite sharply. There is weak interest from the buyers at the Intercontinental Exchange, and the sugar prices, with the kind of decline that we've seen trading below 16, are now at a 2021 low. So it's a multi-year lows that we've seen come in for the sugar prices there. Also, when you look at the overall supplies, those have been increasing as well. We have high production in Brazil. It also has to do with abundant rains that we have seen in Asia that is leading to a higher production coming in from India and Thailand as well. So that is not very supportive for the prices. Also going forward, because the crude prices have continued to decline, the ethanol prices have declined. So there is more that you've seen as cane going for sugar rather than ethanol, increasing inventories yet again. The other one on my screen is cotton, where the prices are now trading at a 2020 lows. The US production is expected 6% year on year. The other major producer is India. Here as well, because we're looking at very strong monsoons for the month of June, 109%. July is expected at 106%. So sowing here also has gained quite strongly. The markets also are looking at weaker demand coming in from China, and that clearly seems to be weighing on prices. The other one is Arabica coffee. Here as well, we've seen prices decline to a 6-month lows. Higher crop supplies in Brazil, higher global inventories, not so strong demand coming in from Europe has been weighing onto the space here as well. And the last one is soybean. The prices here are trading at around 12-week lows. There is higher production in the origin countries like Brazil, Argentina, Australia, US, including India as well. For India, we are trading below MSP now for 8 to 9 months. And the Chinese buying is not so strong because of the tariffs that they have in the international markets, especially from US, and that continues to weigh on as well. I want to take you through on what we've done in this year until now in sense of prices then. And I'll start with edible oil as a space. Barring soybeans, which is up by nearly 3%, you have sunflower, which is down 3%, and palm oil prices down by 9% in this year until now. Take a look at the grains then, and wheat is down 3%, and you have corn prices trading 9% on the weaker side for the year 2025 till time. Good production, especially when it comes to wheat, whether it has been about Russia, Ukraine, India for that matter, continues to weigh on prices. And then you have agriculture, industrial commodities like rubber used in gloves and automotives, etc., and cotton for textile and polyester, etc. As you can see, double-digit percentage decline here as well. Cotton is down by nearly 15% and rubber down 17% in this year until now. And this is the final plate which shows you sugar, cocoa, coffee. And as you can see, we've seen sugar prices decline by 18%, cocoa is down 24%, coffee down 8% as well. So overall inflation when it comes to food commodities definitely does not seem to be a concern, because the first half of 2025 has seen very sharp declines coming in for most of them.
Thank you very much for that. Now let's talk about Keystone Realtors, where the company has won a cluster redevelopment in Andheri. Vinny joins in with the numbers. Vinny?
Hi, good morning. So yes, Keystone Realtor Developers has actually won an 8 housing society redevelopment project. This is in Andheri West. The gross development value for that is around 3,000 crores, cumulative area of around 4.57 acres of land, and saleable value area is around 10.6 lakh square feet. Now in this, as of now, development agreement is signed with 5 of the societies, and letter of intent is received from 3 of the societies, where obviously they'll be signing the development agreement, and they're very confident on that front. So 8 societies where they've signed. And do not forget that just yesterday also we'd seen that they'd won one more redevelopment project of around 4,500 crores in Science. So back-to-back 2 days of redevelopment project.
Thank you very much for that. Inox Wind is the other one that we are tracking right now, where Motilal Oswal has initiated coverage with a buy. Stock is excited. Vivek joins in with the details.
Well, that's right. So interesting note coming in from Motilal Oswal Financial on Inox Wind. So they've initiated coverage on the stock. They have a buy rating. They have a target price of 210 rupees a share. What they're saying is that the company is one of the leading vertically integrated player as far as the wind energy sector is concerned, and they like the stock after the recent correction that it has seen. Remember, they're talking about the company's capabilities, where it delivers end-to-end solutions right from concept to commissioning, as well as operation, as well as maintenance of the entire wind power project. So the entire life cycle is taken care of by the group. What do? They, number one, manufacture both 2 megawatt as well as 3 megawatt wind turbine generators, and they had an order book of almost 3.2 gigawatt at the end of FY25. Along with that, there are 2 listed subsidiaries. Remember, Inox Green Energy manages a 5.1 gigawatt O&M portfolio. This includes both own as well as third-party portfolio. And as far as financials are concerned, they expect the company to deliver a consolidated EBITDA CAGR of 38% from FY25 to FY28. They see a ramp up in WTG execution from 705 megawatt in FY25 to close to 1.8 gigawatt in FY28. And the target price multiple that they have is at almost 25 times FY27 earnings, earnings per share.
Thank you very much for that. Once again, let's put the spotlight on HDB Financials. Day one today on Dalal Street, strong opening, 13% higher on listing day. MK has initiated coverage on HDB Financial with a target price of 900 rupees. They've got a buy rating. That's about a 22% upside compared to the issue price. And it values it at 3 times FY27 price to book. Their positive view stems from its diversified, granular and large-scale lending franchise. So HDB Financial Services higher. Another one is SBI Cards we should look at, because today Goldman Sachs has downgraded SBI Cards to a neutral with a target price of 1,006, and Goldman Sachs has also downgraded IndusInd Bank to a sell with a target price of 722. So these are some stocks in the financial space which are under pressure. By the way, for the Nifty as well, it's flat, but now it's got a red tick going for itself. So the Nifty is moving towards 25,500 at the low point of the day. Get into a break. On the other side is our special segment. It's the economy. Lata will be in conversation with Ajay Srivastava of Global Trade Research Initiative and S. Ganapati of Gokuldas Exports on the likely options for exporters from 9th of July.
कैश कम है, विड्रॉ करना पड़ेगा।
ट्राई SBI डोरस्टेप बैंकिंग, कन्वीनियंट है।
बैंक आएगा, करेगा कैश डिलीवर, टिक। TDS सर्टिफिकेट, टिक टिक। अकाउंट स्टेटमेंट, टिक टिक टिक। हैट्रिक। सबको पता है।
SBI डोरस्टेप बैंकिंग कन्वीनियंट है, सबको पता है।
आपका और हमारा बहुत ही लंबा और करीबी रिश्ता है। हम उस चटकारे में हैं जो आप अपने दोस्तों के साथ लेते हैं, उस दराज में है जिसमें छिपा है माँ के राजमा चावल का राज। कभी आपके हाथ में अच्छाई की चमक बनकर आपका दिल जीतते रहे। तो अगली बार आपको कोई चीज पसंद आ जाए तो उसे पलट के देखिएगा, जरूर हमारा नाम दिख जाएगा।
पेज बनाने के लिए राइट हैंड से फैब्रिक
डू इट योरसेल्फ इन्वेस्टर्स के लिए, रेडीमेड पोर्टफोलियो इन्वेस्टर्स के लिए, एंजल वन फॉर एवरीवन। 3 करोड़ इंडियंस की तरह आप भी शुरू कीजिए। एंजल वन फॉर एवरीवन।
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
कैंट आरओ देता है सबसे प्योर पानी, और कैंट आरओ प्योरिटी दिखाता भी है। खुद ही देख लीजिए। कैंट का सबसे शुद्ध पानी पियो और हेल्दी रहो।
Boss, I just saw Raghav walking towards the parking lot.
Movie date.
He's not going anywhere. My car is parked right behind his.
He's gone.
MG Comedy Fee, the street smart car.
लखनऊ के लिए जाने वाली अवध एक्सप्रेस प्लेटफॉर्म नंबर 2 पर आएगी। गोवा के लिए स्टार क्रूज प्लेटफॉर्म नंबर 2 से ही जाएगा।
ये सब आपको एक प्लेटफॉर्म पर मिले ना मिले, पर शेयर इंडिया प्लेटफॉर्म पे आपको इक्विटीज, डेरिवेटिव्स, कमोडिटीज, इंश्योरेंस, म्यूचुअल फंड्स और एल्गो ट्रेडिंग एक साथ मिलेगी। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Welcome to It's the Economy. India and the United States are racing against time to conclude an interim trade agreement before July 9th, when the full reciprocal tariffs are supposed to kick in. President Donald Trump recently told reporters that India and US will soon strike a deal with much less tariffs. Now, just listen to that bit.
I think we're going to have a deal with India, possibly. And that's going to be a different kind of a deal. It's going to be a deal where we're able to go in and compete. Right now, India doesn't accept anybody in. I think India is going to do that. And if they do that, we're going to have a deal for much less tariffs.
Okay, now just note the word, last 3 words, much less tariffs, indicate there could also be a deal with something more than 10% tariffs, but less than the 26 plus 10, 36% tariffs. So how will the various combinations of tariffs impact India? I have with me Mr. Sivaramakrishnan Ganapati, the Vice Chairman and Managing Director of Gokuldas Exports, and Ajay Srivastava, the founder and head of Global Trade Research Initiative, a trade expert. Gentlemen, thank you very much indeed for your time. If I can start with you, Mr. Srivastava, what have you made of this first statement itself, that there could be a deal? Are you reading this as a likelihood of a tariff between 10 and 36. By the way, I believe it is 36. It would be 10 plus 26.
So it's 26. It's not 10 plus 26. It's 26 or 10. So basically, they want 10% as their base tariff. That's a new zero for the US. And they say their MFN tariff, the normal tariff which US or India charges on the imports, they will remain there. And 26%, they will be kind enough to cut 26%, not charge 26% and charge only 10%. So Indian goods going to the US, if FTA is concluded, then they will be paying MFN tariffs, existing MFN tariffs, plus 10%. For example, for many of the garments, say tariffs range between 8% to 20%. So those tariffs will continue. In addition, 10% more will be there from the US side. In return, India will be cutting all MFN tariffs except on agriculture and dairy, maybe.
Okay. Mr. Sivaramakrishnan, good morning, and thank you very much for, agreeing to speak on this. I know it's speculative, but assuming we strike a deal and it is 10%, what exactly will be the tariff on your products on apparels, and how competitive will they be?
So currently we have the tariff, which, as Ajay Srivastava said, ranging, approximating about 15 to 18% on an average for the goods that we send. And then there is a 10% tariff on top of it. I think if that status quo remains, what is relevant for India is what's the relative tariff. So there is a bunch of countries which are exporting to United States, ranging from China, Vietnam, Bangladesh, India, to several more countries. So it all depends on relative tariff as to how our competitive landscape will be. We also need to know whether it's 10% or even higher, the incremental tariff. So that also needs to be seen. So if I look at the markets, I feel that the US market with tariff will have some stress in terms of rise in prices. And we could, we will have to see how that impacts demand. But having said that, if India does have a differential tariff, which is advantageous for us, then that will be great from a sourcing standpoint. We will see much more sourcing shift to India. So we'll have to wait and see, what happens to us, as well as what happens to other countries.
Yeah, so we will just in a minute run the rival countries. Am I right in guessing that Vietnam gets 46? Am I right in guessing that our major competitors are Vietnam, Sri Lanka, Bangladesh, Philippines and China? Would that be the main competitors, Mr. Sivaramakrishnan, in your area?
By and large, apart from China, of course. But
apart from China. And they also are in for much higher tariffs, even as a base case. And all these other countries, comparable countries that you spoke about, Vietnam, Sri Lanka, Bangladesh, are, going to face higher tariffs. So do you think Indian apparel exporters, at least, are going to face stress, maybe because consumers will buy less at a higher price, but you're not losing the market to competition?
You could say that by and large. But we also need to know, the 46% that you mentioned about Vietnam, that may or may not be the final tariff for them. They are also negotiating with the United States, and there is a likelihood that that may come down for them. But then again, no one knows. So we have to wait and see where that one lands as well. So as long as I maintain that, as long as India has a relative tariff advantage, we will be better off as far as the United States market is concerned.
The chatter, Mr. Srivastava, appears to be more with Britain, EU, India and Japan. I have not heard too many statements from Donald Trump or his secretaries on any other country. So should we expect, as Mr. Sivaramakrishnan fears, that something positive can come even with Bangladesh, Vietnam, etc., especially Vietnam?
So US is currently negotiating with more than 20 countries. And we have to be very clear, these are not the normal FTA negotiations. In an FTA negotiations, both the sides, they cut their MFN tariffs. In this case, US doesn't want to touch their MFN tariffs. So, for example, they already have an FTA with Vietnam in which they have agreed to zero tariffs on garments from Vietnam. But now they are threatening them with higher tariffs and renegotiating. So these are some other kind of negotiations in which US is calling shots. Anybody, I mean, we have to be very cautious. But I am discussing with my friends in 3-4 countries. So things are not moving ahead. For example, Japan, US doesn't want to cut tariffs on Japanese cars. So Japanese is not moving ahead. Europe also is not moving ahead. Vietnam is trying. They have offered many things despite having an FTA in which US already agreed zero tariffs, but still things are in limbo. So apart from India, I don't see anybody has got at the advanced stage where we can say next few days we may have a deal or no deal. All others are in between. That means these negotiations may have to go beyond July 8 deadlines.
Okay. What are you expecting as a base case on July 9th? Never mind if it is speculative, Mr. Srivastava. We are all working with speculations.
Yeah, thanks. So there is nothing from the official side. We are hearing from various sources, India and US, is that India has shown red lines for agriculture, dairy and GMO foods. And in return, India says that give us something. For example, at least lower MFN tariffs on our labor-intensive goods like garments, textiles, leather, handicrafts, etc., so that we have something to show to our domestic audience that we got something else. The deal will be one-sided. So I think US will understand this. You know, if India-US deal doesn't go through, the US whole bogey of this Liberation Day tariff will fall flat. They could not get any other country to sign on the deal except for the UK. We don't have the full details about the UK deal also. So if India deal doesn't happen, US position will be weakened. I think they will understand they are intelligent people and there may be a deal with India.
Okay. Yeah, we are working with the baseline that they are intelligent people and will not shoot themselves in the leg. But, you know, there have been bigger bullies than we thought. Mr. Sivaramakrishnan, what is the base case you are working with? Again, very speculative, but we have to work with something.
Base case is status quo. So underlying tariff remains and 10% continues. You know, because I don't think it's practical to see conclusion of trade deal by July 8th. There are several countries to be, deals with several countries to be closed. So there could be a possibility that this will just get extended. So we are working with that as a base case at the moment.
They will extend the deal. I mean, there is already the taco trade happening. You know, Trump always chickens out trade. And the administration is aware of it. So a lock, stock and barrel repetition of the April 9th postponement to July 9th and from July 9th to another date may be not politically acceptable to the US presidency, to the, to his committee. So what do you think, Mr. Srivastava? You think he will be able to announce an India deal and then status quo on others? Or will it be more? Because it very much matters to people like Mr. Sivaramakrishnan what understanding happens with the other countries.
If deal happens, what Mr. Sivaramakrishnan tells, that position will continue. If this deal doesn't happen, then 10% will become 26% plus MFN of 18, 20, 25, whatever we say. That's the thing. So I think US realizes all these things. It should be important for them to get India on board for the deal, else they will look very weak before the world.
Okay. What is your sense about which of our products could be in danger? I mean, I don't think we are hurt by Harley Davidson or the various alcohols, you know, the tariffs coming down. But I would assume that some products, like for instance, corn, cotton, soybeans, are what, some agricultural experts believe are vulnerable. What is your sense about where are India's vulnerabilities if we open the door?
So only 5% of US exports to India are agriculture and dairy products. I mean, less than 5%. 95% plus are industrial products. So we have no threat from the US if we open those 95%, which are industrial goods. But agriculture goods, agriculture is not a trade subject for us. Our productivity is low and it's a livelihood issue for half the population. So we cannot fiddle with agriculture. So I think agriculture and dairy remains India's red line. Everything else, we need not be scared of US. US is not present in most of the industrial goods space, unlike China. They are into very high-tech products, semiconductors and all those things. But rest, Their exports are very weak, and we need not afraid. There is no threat if we if we protect our agriculture and dairy. Then nothing else to be afraid of US.
Okay, well, they are fighting with Japan to open rice imports into that country. So I'm not sure how much how much we will be able to wrangle. Actually, the Indian position is also difficult because rice and wheat are procured by the government. I mean, farmers in a way are protected because anyway the government comes in and buys. How does that work? Will procurement have to stop? I mean, I guess it cannot.
So they are not only targeting tariff cuts, they are also targeting our MSP, our public stock.
Yeah, what they call non-tariff barriers.
I'll give you one example. If tariff protection is not there, like their rice and wheat are highly subsidized, and the farming is mechanized, and they overproduce many years, and the international prices, they go down very low. So this happened with Africa. Africa, on the advice of some of the countries, they cut their MFN tariffs, and there was imports in Africa, and import were at such a lower price that African farmers could not sell. Next year, they stopped growing wheat and rice there, and there was nothing next year for African population to eat, and there was a famine. We don't want that to happen in India. So we say agriculture, we should keep in our mind very clearly, it's a red line, it's not a trade issue for us.
No, I agree with you, sir. I mean, for about 6 months, the Prime Minister tried to dare and stare down the farmers on just, the farm bills. Yes. And he couldn't. So it is politically impossible for India to sacrifice on agricultural tariffs. And I guess the US would know that. That is really a no-go area. Removing procurement is, I mean, it's a revolution on our hands, and that I don't think we are going in that direction. Just a final word, Mr. Ganapathy, Mr. Sivaramakrishnan, what's the current status? Are you able to sell at 10% plus 18%?
We are able to sell, that 18% or whatever, that underlying tariff is always there. This 10% is incremental. We, of course, saw a degree of slowdown in order placement initially. And at the moment, brands who are buying from us are also unclear as to what would be the tariff post-July, from July 9th onwards. So they're also waiting to, take a final call on further order placements. But, we're still seeing a reasonable order flow. So I don't think that's slowing down at the moment.
Okay, I thought there would be extra order flow because, you want to buy ahead of a likely higher. No such trend.
We haven't seen that trend at the moment.
Either. Okay, all right. Well, we'll have to wait and see. It's only a week away, but it could be a very, very important week ahead. Mr. Sivaramakrishnan and Mr. Ajay Srivastava, thank you very much for bringing whatever clarity we can get at a time like this. These are times when things change with a tweet. And therefore, we are just prepared with the numbers at this point in time to make a decision. We have to wrap up on Bazaar on that note. Chartbusters after the break.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ.
जिंदगी की हर छोटी बड़ी जरूरत के लिए आप जो सपने सजाते हैं, बस उसी उम्मीद को तो हम सहारा लगाते हैं. SIP आपकी सेविंग्स को आपकी खातिर काम पर लगाएगी. आज ही अपनी पहली SIP की शुरुआत करें. अधिक जानकारी के लिए अपने वित्तीय सलाहकार से परामर्श करें. LIC म्यूचुअल फंड द्वारा निवेशक शिक्षा की एक पहल.
म्यूचुअल फंड निवेश बाजार के जोखिम के अधीन हैं. योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ. डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा. अब इससे बेटर इन्वेस्टमेंट है तो बताओ. सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र.
मुरली जी के फादर का कैंसर का इलाज 3 साल चला. पॉलिसी बाजार की टीम ने उनके इलाज का 1 करोड़ का क्लेम अप्रूव करवाने में पूरी हेल्प की. बीमारी में हेल्थ इंश्योरेंस ही काम आएगा. पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 360 रुपए महीने से शुरू.
सर, नो ट्रैक्स.
Glass partition systems by Ozone makes the world go.
Crisac Limited,
launches an initial public offer of equity shares of face value of 2 rupees each in the price band of 233 rupees to 245 rupees per equity share. Bid offer opens on Wednesday, July 2, 2025. Closes on Friday, July 4, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Co-powered by SBI, 7 दशक देश के साथ. In association with Think Equity, Think Motilal Oswal.
And DS Group, create what is worth creating.
Benchmark indices continue to consolidate just below the flat line for the front line indices. We have